there are so many different situations that will arise out of this. And one of them is realizing they're spending too much money and they should downsize in case this happens again, so they have some money in reserve. Another one will be they realize they need more space because they can't stand being so close in confined quarters with their family. Another one will be 9 months from now, there will be a surplus of babies coming and people will need bigger homes. Another thing will be people are going to get divorced. I've already started to see it and hear stories about it, and they will need to move as well. So combine all of that, it's going to get busy.
All right.
Good.
You're going to interrupt me already? Well,
I am.
Episode 80 of KT Confidential, the real estate podcast. We are your hosts. I'm Ariel Kormendy, and got my partner as always.
I'm Adrian.
Adrian
Trott. Thanks for the intro.
Episode 80 of this podcast. And today I want to talk about the blog that we posted, top properties to invest in right now. It's available on our website. And the reason I wanted to talk to you about that today, Adrian, is because I got a number of DMs from people that say, hey, yeah, I'm thinking about buying an investment property. Is it a good time? What kind of properties? Yada, yada, yada. So I wanted to chat a little bit about that because I believe what's happened now with COVID is it's changing a little bit of the layout, if you will, or the dynamics of owning an investment property and the thought process behind that. And also the demand, what I believe is going to be the demand for rental properties going forward, whether it's due to affordability or liquidity or whatever. So that's the topic for today, my friend. What did you have for breakfast?
Oh, geez. I had a bowl. Tessa wanted to make a fruit salad. So we had, what did we have? We had very limited fruit on hand, apple and banana. So we diced up some apple and banana, and I threw that in with some granola and plain Greek yogurt. That was my breakfast.
Oh, that's not too bad. Not much of a fruit salad when you start adding yogurt in there. It's more of a parfait.
Well, no, it was, exactly. But she calls it a fruit salad.
So one of my favorite things as a kid was making fruit salad and sprinkling just a little bit of sugar on top and a squirt of lemon juice and tossing that all together. It's quite nice.
Yeah, sounds good.
I actually had a similar breakfast.
Did you?
Yeah, I had some plain Greek yogurt with a muesli that has all kinds of seeds in it, like hemp, pumpkin, and flax and whatever. And topped it off with a nice handful of blueberries and just a drizzle of honey on top, and it was delicious. Gave me the fuel. Morning.
I feel like I should raise my chair up. It's funny. I raised my chair up half an inch, and I blocked that one light. But my chair, it doesn't actually adjust anymore. It's no longer adjustable, so I'll have to just sit up.
Well, considering you do work from home a fair bit now, and obviously now, but probably will work from home more forward, it might be a good idea to invest in a good chair. I'm thinking of doing the same. We kind of talked about that in the last podcast. Anyways, let's get right to it. So, I posted a few things on the Instagram stories yesterday, and there's a difference between statistics and reality, right? Like statistics are taken
absolutely
from the Toronto Real Estate Board or whatever board you're looking at, and they're taken as a whole. And then, certain things aren't taken into account. Like if a property was on the market and then it canceled the listing or expired the listing and it comes back on and it sells in 2 days for X amount of dollars, it's that new listing that's taken into account and not the past listings. And so there's a lot of numbers that we will see in the statistics that don't tell necessarily a true story. So there's a difference between looking at statistics and people talking all that professional jargon, and then, the blue collar side of actually being, in the thick of it and being in the know of exactly what's going on in the market. And that's when a good realtor understands exactly the pulse of what's happening. And in the last week, we've seen a tremendous increase on activity and interest. I just noticed you did a deal this week out in Cambridge. Congrats.
Thank you.
Heather has had an offer in on a property last night in Oakville. Chris did a deal here in Milton. We got a number of people that contacted us in the last week that want to list their property for sale. So we've got a bunch of listings lined up for June, July, and forward. So the activity is starting to spur. And that's why I think we got a lot of messages on this blog. So obviously,
well, one of the best gauges we have is definitely just our firsthand experience with people, and we can see firsthand and hear firsthand what their outlook on the market is, because that will tell us kind of what direction things are heading. If people have a very positive outlook, if people are anxious to sell and buy and they're excited about the thought of it still, then we can generally get a good understanding for where we're going to be. And that's the way it's been this entire time. And there were people forecasting like a 30% reduction in property value, where we've seen maybe 5%. And I think it's already starting to creep up now, that people are getting, especially the warmer weather and government changing their policies to promote people to go out and socialize a little bit more, or at least get outdoors anyways. So that's our biggest thing. And I was listening to one local realtor who was forecasting, he was actually giving all the other real estate agents a hard time, those who were saying, it's going to boom, the market's going to come back really strong. He was saying, no, I worked through the 2018 recession and it took a good year and a half to get back on track. And that's what's going to happen again. And that's his mentality. So perhaps that's the direction his business will take, because he's not motivated to hustle because of what he thinks will happen. But I think he's completely wrong. I think based on what we're hearing and seeing, it is going to come back very strong. It never really, it definitely, the volume was down significantly, but the positive outlook was never, and it's already starting to come back quick.
So when we talk about things like, affordability and especially as an investment property, people will have either equity in their existing home or some sort of cash on hand or other type of investment that they want to transfer and buy some real estate. We've seen the stock market bounce back quite a bit in many sectors. I talked about Facebook several weeks ago when it was down around $175 a share. And, I've been invested in that stock for a number of years now. And I saw that as a buying opportunity, but had no funds to invest, unfortunately. It's at $220 right now, which is the highest it's ever been. So certain sectors are doing extremely well. So I think most people's portfolio will come out of this relatively balanced. If you went into it with a relatively balanced portfolio, if you were all in on oil or whatever, then it might be a different story. But so I think people will come out of this okay, because now as the markets and businesses and just the economy starts opening up, 2 months is not going to, it's going to put some hardships on people, but it won't take long for things to get back to normal, even though there will be a new normal, as everybody's saying. But in terms of investor confidence, I think it'll be there pretty quickly, if not already. So the other part of the equation is that now, as of last week, new home builders are back into work. Construction companies and and custom builders and all that, they're back to work and moving along pretty quickly right away. So people have committed, right? They've committed to buying new homes, thousands of them across the GTA. That's going to in turn get their homes on the market. And hey, some of them won't sell, or some of them might have to take a discount. But there's a lot of homes that are getting a lot of attention right now. Multiple offers are happening already because of demand. Mortgage rates are extremely low. So I think this all coupled together is going to mean there are opportunities, and there's also going to be a lot of activity.
I agree completely. And we're already seeing it. So
let's talk.
There's no denying it.
Let's talk about the best property. If a client calls you right now, Adrian, and says, "I want to buy a rental property," go. Your answer.
Let's do it. I mean, there's obviously variables that you need to take into consideration. Whether they want to manage it on their own or they're hiring someone to manage it for them. If they're doing it on their own, then they want to think geographically what's feasible as far as the distance that they can go to do that. Then there's affordability. And then, whether or not they actually do want to. Some people might want to, but don't have the funds to. They might be better off investing in a REIT or something similar. But for first-time investors, I wouldn't overthink it. A lot of people say, "Oh, should I buy a bigger detached home or a smaller townhouse, or what would I get a better return on?" As a percentage for what you're putting in, it'll often be very similar. So I think people should definitely not stretch themselves. I think it's very important to have a pool of emergency funds available, because as with any investment, it is a risk. So they should have money available in case there's a month or two with no rent, whether it's in between tenants or unforeseen circumstances like COVID, where a tenant's not making any income and they need to make concessions and maybe help them out or whatever.
Oh, even unexpected expenses, especially pertaining to the property. We've experienced that with one of our rentals. We got a call the other day about the toilet making weird sounds. So we got to send a plumber over there and have it repaired.
On the roof?
We had the roof repaired not long ago. The fridge started to leak a couple of months ago. So all of a sudden in the last 2-3 months, we've spent quite a few $100s in just getting maintenance things done. Those are expected, right? It comes at the same time that we gave the tenant a little bit of a discount on their rent just for being nice guys during COVID. But, you don't expect those expenses, and you've got to have some money set aside for that. So that's a big consideration. You talked about geographically staying close to home, and depending on if you do hire a management company or not, or what have you. I think having a property close to home is good, period. Because again, unexpected things come up. You want to check in on it yourself, potentially, even if you have a property manager. The area better. And it's just, I think it's good practice if you can to keep it close to home. What does close mean? I would say within a half an hour drive. Like if you can get it within walking distance or a short drive, that's amazing. But not too many people have that luxury. Mm-hmm. So for me right now, I'm a big fan of 3-story townhomes. Big fan. I've owned one myself. The one that I purchased, which was I purchased it, I believe, in 2003 or 2004. So if you can imagine, 16 or 17 years ago already. But they were one of the first 3-story townhomes built, newer style, built by Mattamy Homes in Oakville. And since then, they've pushed out a lot of those types of homes, what they dub as village homes. And I still think, as an investor, if you don't want maintenance fees, okay, because a lot of people are afraid of that. Maybe that's a whole other topic we can talk about some other time. But what I like about them is you don't have a backyard to maintain. You've got just a small front yard. There isn't a basement, so you're not worried about people renting out storage space or having to grow up, although that's always challenging now, especially with the laws, and can do it in a bedroom, I suppose. But leaks, floods, grading issues, all of those things are eliminated completely.
Well, and they're relatively easy to rent.
And that's my final point. They are some of the most affordable types of homes to purchase, and then they rent very, very well. Young professional couples, young families just starting out, people that are in a condo need some more space. And it still gives people the versatility of having a driveway parking plus a garage. There is a little bit of extra storage in the garage, plus you get the understairs storage and all that. You get your balcony off of the second floor, which is beautiful for barbecuing and sitting outside. Again, not a lot of maintenance. You can throw some plants out there. And most people like the second floor where it's living room, dining room, kitchen, for the most part, really open concept. And having the bedroom separated is quite nice. So, you can buy these types of homes now for about $600,000, like $600,000 to $700,000 is the range in Milton. A little bit higher in Oakville. Burlington doesn't have too many of them, but they would be more or less in line, the same price in Burlington. There is also in Guelph, Kitchener-Waterloo area. So pretty good areas to look at. So I'm a big fan of these properties. I think that you have to look at the long term when you're investing like that. And when I mean long term is not a short flip, not a 6 month, a year, or anything like that. Once you get into year number 2, the numbers might make sense for you to cash out on it. They might not.
Well, at that point, it depends on what you're doing with the money too. Like if you listen to most investors, rent and hold is rent, hold, and then reinvest, refinance it, reinvest.
Right.
That's a great strategy.
And keep doing that on a regular basis, right? The purchase, rent it, get a good tenant in there, pay down the mortgage, and increase your equity every year, and then refinance that equity and leverage it to then purchase another property. And that's going to become more and more feasible with mortgage rates right now being so low, and purchase prices going up, and tenant demand being up as well.
I agree. I mean, at the end of the day, I think the big thing comes down to affordability. And even with that, like refinancing and buying a second property, it's good to leverage those assets to increase your portfolio. But at the same time, you need to be smart about it in making sure that as your portfolio grows, as does your risk. So you need to make sure that you're protected, because if the market tanks, or even if it doesn't, let's say you just have bad luck and you get 2 bad tenants at the same time, and now you're carrying 2 properties plus your primary residence, that's going to put a big strain on the vast majority of people's finances.
What I think is going to be a big change in the mentality, though, right now is COVID, right? Like people are going to come out of here saying, hey, that could happen again. And I don't want to be in the same, or I don't want to be in a worse position if it does ever happen again.
Yeah. Well, and there's, we've had good luck with our tenants. KT Property Management has had excellent luck with all of their tenants. The company has had no issues with rent coming in. Some things we actually had some. You had mentioned that we gave a price reduction for a couple of months to our personal tenants. We also had a client of KTPM who gave a gift certificate to their tenant who happened to be a frontline worker. So that was very well received. So there are things you can do to minimize those risks also. And obviously you're running a business, and you really have to think of your tenant as your customer and treat them that way.
Yeah, I think that's a big miss that a lot of landlords miss, is treating the property as a business, right? And I think that's actually where what I'm seeing from our other company, from KTPM, is that um, the benefit of having the management company taking care of those things kind of alleviates having to run the business yourself. And some people they don't have the time, the patience, the knowledge, or the wherewithal. So I would say treating it as a business is the number one aspect after you've actually purchased something, whether it's the marketing, the presentation of it, the sourcing of tenants, the way you're handling that tenant, which is your client essentially, and then the finances behind it all, right? And I mean, I love the app that we've got for our landlords and tenants, where they can pop on and see all the debits and credits to the property. And I think that was a great addition to our portfolio of companies, because there's a real demand for that out there. And it's tax deductible too, right? So at the end of the day, the cost to people is negligible. So of course, a little bit self promotion here and a little prejudice on it, but if you don't hire a property management company, you better be prepared to be investing time, money, and effort into that property to make it work and make it viable.
Yeah, which is fine, and a lot of people do, and they have no problem with it. It's just to each their own. But just and that's a big thing with getting into investing in anything, is you need to understand what's involved. Don't go in blind. Educate yourself. Work with a realtor that can provide you the information you need to help you make the decisions and what property to purchase, and then subsequently find the right tenant. But I think at the end of the day, when it comes down to the type of property, I think because I've had some people ask me should I buy bigger? Will I get a better return on a more expensive house versus a smaller condo? I think you're better to have more smaller units than you are fewer large units. So I would say to invest in the smaller, more affordable properties, because then if you have months where you don't have income, your risk is lower, your expenses are lower. Multi-residential is great. If you can get a duplex, a fourplex, a larger property, if you can afford it, that's even better. And then maybe if you have a duplex, one tenant is gone 1 month, maybe you're between tenants in one unit, you're still having some income. So you're not out 100% of the cost.
Yeah, I agree with you. I would prefer having condos and small townhomes versus larger detached homes. Mm-hmm. Not only the out-of-pocket initial expenses, but the potential expenses going forward, right? Like if to replace the roof on a property, I'd rather do it on a small townhome than on a 3,000 square foot or whatever detached home. So you got to take that into consideration. And then in terms of what type of property, it also depends on where it is. What location you're honing in on, right? Like if you're downtown Toronto, you're not going to have too many options, and condos are probably the best investment there anyways. Whereas in different areas like Oakville, as an example, a condo might not be the best option. So it all depends on geographic location, of course. And, you talk about areas like Guelph as an example. I'm a big fan of Guelph right now, and will be for a number of years going forward. For the longest time, the best investment properties in Guelph were those that could house a bunch of students, right? If you're into that thing. But having 5 or 6 students pay $500-600 a month was the norm, and you would come out cash flow positive from it. Now we're seeing more and more families and young professionals move out to Guelph. So the dynamics of it has changed quite a bit, and even students, right? Like I'm seeing parents now just renting a whole place for their kid, or sharing with their best friend. No longer are there as many, homes with 6 to 8 kids in it, right? And
or some parents that can afford to, they're buying the house and then renting them out to multiple students.
Yes.
And in the end, it costs them they often will make money.
Huge opportunity there. If if your kid's going to Guelph University and has a few friends that they're all planning on moving in together and paying rent, I'd be that parent that says, well, hang on a minute. If you're all paying rent, it's going to be to me.
Yeah, exactly.
Right?
Yeah. I think
too.
I think a lot of people, perhaps they're, like we'll use Halton as an example. You live in Halton, you see house prices, and the thought of owning a second property might be outside what you think is feasible because of the price point. So we helped a number of people purchase outside of the area. So I think if you want to get your feet wet in investing in real estate, you need to be open-minded to going a little bit further out. Cambridge, Guelph, great areas. One thing to keep in mind, depending on where you go, is your demographic changes too. So the quality of tenants may change. And we've said this before, it's very important that going back to running your rental as a business, the quality and condition of your house will attract a similar quality and type of person. So even in a place where your demographic might be a little bit more sketchy, if you take the initiative to make your property more attractive, then you may be able to filter through a lot of those sketchy, questionable people to find the few gems that do exist.
And that's true in any location, though, right?
Yeah.
So if you have a little bit of a rundown home that's outdated, a little bit smelly, a little bit dirty, because you had tenants in it, or that's the way you bought it, or whatever, when you're marketing the property, you're not going to attract somebody that's going to fall in love with the place.
Right.
You're going to attract somebody that needs to rent something and nobody else is either accepting them, or your price is so cheap that it's a no-brainer for them, even if they have to invest a bit of money into the property.
Yeah.
So the best thing to do is have a place that's quote unquote move-in ready, something that could be advertised as a home for sale and not just for rent, because you want to attract a tenant that calls it their home and not just finding a place to live or settling on something because they can't get approved for any other rental property, right?
Yeah.
So that's a very, very valid and very good point. And so that's why sometimes the location and the price, are relatable a little bit when it comes to that. But also, as you go further away from the core of the GTA, and even in certain pockets of the GTA, right? Like you could be, let's say in Milton, if you need to take the GO train every morning and you're at the other end of town, it is a 15 to 20-minute drive in busy mornings now to the GO train. Is that suitable, or is having something close at hand there more suitable for you? So all of those things go into consideration, and then will determine the pool of people you have to choose from, right? Because again, the more desirable the property, the better the location, the bigger that pool is going to be. So if you have a shithole in the middle of buttfuck nowhere, don't blame us if your tenant isn't paying the bills, kind of thing, right? So you got to do that due diligence and be prepared for all the ups and downs that come with that. If you had to purchase yourself, and forget about duplexes and multi-residential, because I know that's going to be the next thing that comes out of your mouth. Oh, multi-residential. He's been talking about it for years, folks. Realistically, right now, if you had to buy a property that you were going to hold on to for a bit, maybe long term, but not short term. So mid to long term, you were open to that kind of half an hour, maybe a little bit longer drive from home. So half an hour radius around Milton. And your budget was open, but no more than, let's say, $700,000.
Well, that's a lot of money for an investment property for most people.
I think that's the cap, though. Is it? I don't know.
I think so.
Well, hang on. It depends on circumstances, obviously, right? Like if you've got 30 grand, you're not going to be buying a $700,000 house. But if you bought a home in Oakville, Milton, or Burlington 5 to 10 years ago, you're sitting on, I guarantee you, unless you were stupid with your money and had to refinance or pay off a shit ton of other debt, if you were good about it, you've got a bunch of equity sitting in your home right now. I guarantee you the average person can pull out 150 grand in equity. So there's
but that doesn't make a difference in terms of approval. I'm talking people getting approved. Like for the we're talking average people here. So let's talk to the masses. And I believe that.
So you're talking $120,000 household income?
Yeah.
If you've got a 20% down payment, and then you can provide a rental agreement, and half of that rental income is now considered in your mortgage approval. So the numbers are actually not unrealistic for people to be able to do that. But I'll open it up to you then. You tell me what if you're an average income earner right now at $120,000 family income, and you your money accordingly, you've got some equity or whatever that is.
I think 500 is probably more reasonable.
Our client database, the family income is a lot more than $120,000. It's probably upwards between 150 and 2. So it depends what obviously that family household income is, but okay, go. What?
Well, I would think 500 is reasonable for the average person.
Okay, so then let's just say I'll use your number then, right? 500 grand. You got $100,000 down payment, which is reasonable, especially if you're going to pull out some, I don't know, GICs or fuck. I know people pulling out RRSPs now to even do this. Or you're going to take a line of credit, home line equity, refinance, new mortgage on the new or your existing property, whatever. Let's say it's 500 grand. What are you buying? You.
What or where or both?
Yeah. Well, what?
Yeah.
You can't buy a detached home or a townhouse.
No, I know, but I'm saying, okay, so I think that, and this is something you're saying we're holding for a bit, right?
Mid to long term. So 3 to 10 years, let's say.
Really, I think people overthink it. I think whatever you can afford, just buy it. I think generally speaking, as a percentage, most places are going to do equally well. I think it comes down more to making sure that, I don't know, it's hard to convey, but I've helped many people buy condos in Milton as rental properties. They're doing exceptionally well. The market's not doing right now. It's probably not as good as it was.
Just fucking buy something.
That's what I think. But that's my point. Is I think people overthink it.
Yeah, but that's where I think it's our job to then help them through that process of thinking about it. Because if we're just sitting back and saying, well, just fucking buy something, that's not helping their thought process. I think condos, specifically in Milton, and I'm not, again, no real prejudice to it. I live in Milton, work in Milton. Yes, I can select a few other locations, like some areas in Burlington, maybe a couple of the developments in Oakville. I wouldn't touch Mississauga for condos right now. There's a lot of condos in Mississauga. People are looking to drive a little bit further out for affordability, get out of the hustle and bustle. Maintenance fees tend to be a lot higher and amenities a lot higher, which usually aren't too necessary out in these areas. You can buy a 1-bedroom, a 1+1 for anywhere from kind of 420 to 470. That seems to be the range. I think those are going to provide a great return on being able to rent it out. A lot of single people, a lot of elder folk, a lot of couples that just don't want the maintenance, snowbirds, all these, so many people. And in Milton, there just isn't enough supply of them. There are more buildings being built now.
Well, that was my what I was going to say is we had this conversation last November, and I mentioned at that time that there was a number of low-rise and mid-rise condos that were going to be closing in the new year, which they did, and we've seen it shift. So last year, around in the fall and towards the end of summer, we helped a number of people buy condos in Milton, and they were buying them for under $400,000 and renting them out for sometimes $2,000 monthly. You can still rent it for, actually rents actually come down a bit, but prices have gone up. So it's not as lucrative right now for that purpose. Although I do think there's still lots of opportunity for appreciation because of the growth going on. So I don't think it's a bad option at all. So if proximity is close to your house, it's convenient, it's still a good option. But I think as you go further west, the rents don't decrease substantially, not nearly as much as the prices do. So I think sometimes if you're open-minded to go into Guelph, Cambridge, Waterloo, whatever, I think there's a lot of opportunity out there where your purchase price is less, your rent's less, but proportionately not reducing as much as the purchase price.
Yeah, I think Guelph has a number of options where, like for under $500,000, you can still get a 3-story townhome.
Yeah,
and rent on it. We'll call it, I don't know, $1,700 compared to paying $625 in Milton and renting it for a couple grand, right? So, relativity in terms of what you're going to pay extra on your mortgage compared to the rent that you're going to lose out on. Sometimes it's better to look out that way. But I love cheap condos. You got to make sure that the building is one that you're not going to get special assessments, especially real quick. If the building is apart, you might have some financial issues going forward. I don't like ones that have a ton of amenities. I prefer if it doesn't have a pool. All you need is a gym and a community room. So in Milton, the development called Maple Crossing and Main there at Main and Maple. I love those. We've helped clients purchase a number of them. I owned one that I had as a investment property. We're managing several of them in the buildings now with KTPM. So I think they're great. I think they're going to provide a real nice return on the investment. Location is phenomenal. They're pretty well managed. Some of them are getting a little bit older now, so you got to be careful on the maintenance fees and just do your due diligence.
But the nice thing with that, and it's quite a conversation to have, not probably too lengthy to go into detail with now, but maintenance fees are tax deductible. And if you buy a freehold home, just as we've had recent experiences with the roof needing repair, the plumbing issues, et cetera, you have expenses. So with a condo,
and you're talking about expenses now, and I want people to fully understand, especially if you're a first-time investor or you're new to this or you're thinking about it, whatever. You have your revenue, which is your gross rent, right? So let's say you're getting $1,000 a month in rent. From that number, all of your expenses are being deducted. So your mortgage interest, any expenses to maintain the property, ongoing expenses, you might have insurance, property management fees, all of those things are getting deducted from your gross rent. Now, people tell me, I want a cash flow positive property. Well, that's great and all, but
if you
it's
want to
not
put 50% down, you may get it.
Right. Yeah. It's not feasible with a 20% down mortgage in most cases. But
Well,
hear
not
me
in the
out.
beginning, but 5 years from now.
Yeah, different story. But we're talking as of today. So most people, I believe, that truly will take the step in investing in income properties are going to be at a higher tax rate. You're talking 40 to 50% tax rate, right?
Mhm.
Um, if you're taking a loss on it, it's getting subtracted from your income. So even your loss is only a 50% loss of what it actually is. And meanwhile, that property is growing, and you're paying down the mortgage. You're paying down the interest every month by about 40 to 50%. And your appreciation is probably going to be on average 6% over the 10-year period. That's a hell of a return. If you're talking 5 to 10 years, you're talking equity of $150,000 to $300,000 on that $500,000 investment. That's a hell of a return on your investment.
I think the biggest thing, I think that you nailed it with the perception of cash flow positive. It really doesn't exist under 90% of circumstances for the average person. So I don't know where they got that preconceived notion that they can accomplish that, but what they need to think is more long term, because as they hold on to that property, not only are they building equity in it, but rents are increasing annually, on average about 2%. So 5 years from now, you're collecting significantly more than you were, and maybe at that point you're cash flow positive, and then you've paid down your mortgage significantly. So it's about the long game with rental properties. And you're right, all of a sudden, especially for people that are not self-employed and don't have the benefits of being able to write things off, all of a sudden now you have a lot of taxable deductions from your cell phone, reasonable costs for your and automotive.
Record here, and only to the people that are listening, but there are landlords out there that if you purchased a box of nails, it might have been for your investment property.
I am not getting in on this conversation.
You don't want to be audited?
No, exactly.
Our books are really clean, and I have no issues there. But realistically, any expenses are, you're right, you have a deduction, and even to the point where the debate could be, and I don't know, I'm not an accountant and I'm not in that position, but if you are not self-employed, like you said, and don't have the ability to deduct items, if you are self-managing that property, your car potentially, depending on what you're doing with that investment property, could be, some portion of it could be deductible.
Yeah, it is. I was recently we were talking about taxes, and it clearly states that reasonable automotive expenses can be deducted. I mean, anything related to it. If you need to take phone calls related to it, if you need to drive, all of a sudden your gas, your maintenance, your car payment, your insurance, those things, you can now write off a reasonable portion of it that might be associated with that business.
Yep. So, there's a lot of benefits behind the scenes that people don't really think about unless they're really into it. So, there's a lot of things to consider. For those of you listening, we love talking about this stuff. So make sure you're subscribing to the YouTube channel and giving us a thumbs up, following us wherever you're listening to this podcast. We're going to start getting a lot more into in-depth conversations like this, where we nail down specifics and give you our insights. And this is all free, folks, so it doesn't get better than that. Adrian, what is your outlook on rentals and tenants now over the next 2, 3, 4 months? Like, for the rest of 2020, let's say, right? We're into June pretty much. So for the rest of the year. Is the demand for rentals going to go up, and are the up or down? And what are the prices of rentals going to do you think?
I suspect very much in line with my views on what's going to happen with the general industry in terms of resale as well. And I think that in September, we'll see a very similar market to what we typically experience in the spring. There's a lot of people right now holding off on selling with anticipation of things getting back to normal. And I think we're going to see sometime in the fall, early fall, late summer, we're going to see, and we're already starting to see it, a lot of those buyers coming out, but we don't have the inventory yet because the sellers are waiting to see the activity. So we're going to have more buyers come out, more tenants coming out, more competition. And then all of a sudden, we're going to have more inventory once everybody says, oh, well, things are starting to get back to normal. We should list now. It's a good time to list. But, nevertheless, I'm confident that prices and for rent and for home values will be increasing because the demand is there. And we see it daily.
It's all on about the demand. And also what I think a lot of people are going to be contemplating is, do I want to move based on my experience of self-isolating? Right. If you were locked in your house like we've been for the last 10 or 11 weeks and now just starting to slowly creep out of the house with full gear and whatnot. Although I can tell you, I'll probably never do my grocery shopping in store again. I got this whole online home delivery thing nailed, and it's great. But I think what's going to happen is a lot of people are going to say, well, we need more room. We need more space.
Yeah.
Or
we can't afford what we have. One way or another.
Right. Whether you're renting or the home ownership side of it, there's going to be affordability issues. There's a lot of people that have been laid off, didn't have 3, 4, 5 months reserve, and are now pinching pennies or going to have to. So if they had a 3-bedroom home and one of the bedrooms was used as a home office or a guest room, sorry, we might be down to 2-bedroom home now. Or vice versa, somebody with a 2-bedroom home. Hey, there's a lot of people that are going to have babies early.
I was just going to say that there are so many different situations that will arise out of this. And one of them is realizing they're spending too much money and they should downsize in case this happens again so they have some money in reserve. Another one will be they realize they need more space because they can't stand being so close in confined quarters with their family. Another one will be 9 months from now, there will be a surplus of babies coming and people will need bigger homes. Another thing will be people are going to get divorced. I've already started to see it and hear stories about it, and they will need to move as well. So combine all of that, it's going to get busy.
If you didn't like your spouse going into COVID, you certainly are not going to like them coming out of it. So we are divorce specialists and have done a number of deals over the years on that kind of transaction. Anyways, this was episode 80. I hope you guys enjoyed listening to it. Again, hit that subscribe button on YouTube. You can watch it. You go straight to ktconfidential.ca. Takes you right to the playlist. You can see all 80 episodes. Make sure you're following and liking us on any of the platforms you're listening to your podcast on. We're on Instagram, Facebook, lots of content there for you. Check out the blog. Thank you for listening or watching. Send us a comment. Let us know what you want us to talk about in the next episode.
Ciao. Have a good night. Good day. It's still early.
I know. It's not even noon. See ya.
Got a long day ahead of us.